Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. And man, do we got a lot of things to go over. As expected, the Federal Reserve cut interest rates yesterday, 1/4 point, announced the ending of quantitative tightening, which will end December the 1st. But then Jay Powell talked a little tough about the rate cut that everyone was anticipating for December. So we'll cover that. We have trade news. The meeting between Trump and Xi Jinping has happened. And I'll be honest, kind of looks like a victory for the Chinese, but we'll look at it. We'll tell you what good news for soybean farmers. Tariffs get a little less, so let's call that a good thing. And China agreed not to rare earth us to death for another year. We'll see if that is supposed to be signed any day, but we'll go over all of those details as well. And then last but not least, I am, for all of you Texit folks, it's double down time, maybe triple down time. We just made the single biggest mining equipment purchase to date. We have now bought and paid for 12 mega mines. So funny. I mean, the first one, any day, right? Any day, the first one's going to go live. But essentially now, we've bought enough mega mines, 12 of them. That's over 40 million mega hash. It's almost half of the mine. We've sold about 17.5 mega hash. There's a reason he's buying so much more equipment than what has been sold, and I think you're going to see, I know it, big things are coming. Get in. If you're already in, get more in. Get your friends in. Get your family in. Why? Because this is what is going to be needed to survive in this crazy end of fiat environment that we're living in. Our toll-free number, 800-951-0592. Obamacare premiums are now out in all states. Remember, we got the states that did their own. Was it earlier this week? Maybe it was last week. Now we got them all. And it's not pretty. The average increase in Obamacare premiums, 30% is going to be the average. And unfortunately, you small business owners, 100%. You know, anybody out there making more than 130 that doesn't have insurance through work, which is small business owners, you're going to get hit the biggest in all of that. But hey, you know, let's blame the tariffs, right? Let's blame that instead. I still got some silver rounds. By the way, silver, $48.75. Yeah. Remember, I've got silver rounds at $48, $960 an ounce. That's an even better deal than yesterday. Even more below spot. You got gold up $65. Well, gold's pretty much right where we left it yesterday at $4,000. Not bad. Not bad. Gold is finally saying, yeah, that's about enough. That's about enough. We were overbought. We're not overbought anymore. 20s, $41.95. Again, 800-951-0592. The website at allamericangold.com. And, you know, the big thing yesterday, like I said, we got what we thought. We got the quarter of a point. We got the ending of quantitative tightening. By the way, I've got an update. Mark Cabana, Bank of America. Listen, why is this guy important? He is who the market looks to tell us when there is an issue, a liquidity issue in the Treasury market, our Treasury market. And he came out and said, everybody get ready because there's going to be another issue in the U.S. Treasury market. And it's funny because he said that he wanted Jay Powell yesterday not only to end quantitative tightening, but to bring back quantitative easing. Here's what this just means. This guy has a track record that says, hey, I know what I'm talking about, right? And he's proven it over and over and over again. Every time the Fed has announced any type of quantitative easing, any type of emergency where they, oh my gosh, we got to open up a window and give out people money, he's out there every time, ahead of time, saying, hey guys, this is going to happen, and he just did it again. You don't think gold and silver are going a lot higher? Well, you better guess again. We'll be back. 800-951-0592, Patriot Radio News Hour on this Thursday. Quick look in. So we got the Dow, which ended up down yesterday. It's up 350, but the S&P and the NASDAQ are lower. The S&P is down 18, the NASDAQ's down 200. The MAX 7, not that impressive. Not bad, but nothing. Let's just say that with the valuations that they're at now, very difficult, even with numbers that are outside of bubblicious, are really good numbers. They're not that good. The 10-year note, now this is interesting, 4.1. So remember, we got a little bit below 4%, hang around right around 4%, shot up after Jay Powell put some uncertainty in the rate cuts by saying the December rate cuts is not a foregone conclusion. And then it kind of, I think that would have been okay. Right? Of course, no rate cut's a foregone conclusion. But then he said, not by a long shot. Whoops. What does that mean? Well, in his little speech, Jay Powell was talking about inflation. Now, remember, I've been telling you now, we got to believe 3% inflation is mild. And talked about jobs, the economy, and really focused in on jobless claims. That's kind of his new sticking thing. Well, until I see more layoffs in jobless claims, I'm going to go with no one's really hiring, no one's really firing. I mean, there's plenty of people getting fired, but you know what I'm saying. There's not a big move, right? But then he said he tried to wash away inflation as to why it is that they're cutting rates. By the way, the vote was 10-2. There was 2 dissenters, which in Fed term is like, oh my God, that's almost mutiny. Well, one dissented, Mirren, a Trump appointee, because he wanted 50 basis points. No shock. The other dissenter, and his name escapes me, I apologize, but it wasn't Cook. The other dissenter didn't want to cut rates. Everybody else voted for the quarter of a point. But he said, if we didn't have the tariffs, inflation, and he started to guess, saying that, The tariffs, who knows, it could be a half point, could be 0.6, maybe inflation would only be 2.4%. Right? Kind of justifying why it is that they're not doing and living up to their mandate. Which even at 2.4% is still well above the quote-unquote goal. Of course, then I started thinking, wait a minute. The majority of the food at the supermarket, that's not tariff-related. Eggs and beef and produce, it's not. Some of it, a little bit, maybe tomatoes, but outside, it's not. Health insurance, that's not tariff-related. Medical costs, not tariff-related. Car insurance, not tariff-related. Home insurance, not tariff-related. The price of land, not tariff-related. It's a fantasy. It's just a way for them to continue to gaslight everybody into believing that somehow they actually have a clue. They have no clue. And when we were talking in the first segment, he announced the end of quantitative tightening, and he said, we're going to end it in a month. And he goes, we're doing so little anyway, but we ought to give the market time. But let me tell you what's really going on. The repo facility keeps getting worse. Now, it's funny because he didn't say that in his little conference, his little presser. And it's something where day by day now, more and more financial institutions are having to borrow from the Fed's repo facility. This is the same facility that had an extra $2.5 trillion in it. This is why they're cutting rates. This is why, oh, by the way, it was Jeffrey Schmidt. He was the guy that voted no, so just to let you know. But this is why Mark Cubana is out there saying, hey, guys, quantitative easing is coming back. And towards the end of Powell's conference, boy, they did such a good job. They had that I want to say it was Steve Leishman, the guy on TV, the CNBC guy. By the way, gold's up. I did not tell you, gold's up 70. Did I tell you guys that? Silver's up $1.32. By the way, silver now almost $49. Right? We got silver rounds. What's left of the silver rounds at $48 a piece, $960. Yeah, get them. He says to Jay Powell, his question. Well, Chairman Powell, as the economy gets bigger, which means as the debt gets bigger, wouldn't it be realistic to have the Fed's balance sheet get bigger? What? Wait a minute. Now we're going to go with this new story that the more debt we have is reason why the Fed's balance sheet has to get bigger. And Jay Powell, boy, he just leaned right. It was, I don't know, but it sure seemed scripted. And all as Jay Powell said was, well, yes, and that would stand to reason. Yeah, we're just going to have to, increase the balance sheet as the, quote, economy, what do they mean by economy? The debt gets bigger. Wow. Let me tell you what that means. Two things. They're not done cutting rates. Because obviously you want the rates as low as you can possibly get them. And I don't think they can't get them to zero again. I don't think. I mean, if the unemployment rate jumped up to 8, 9, 10%, then yeah, we could go to zero. But I'm just saying where we sit today, which is, they're calling it the K economy. That for those of you that don't know what the K economy is you've got the straight line of the K, then you've got the one angle, the upper angle, and then you've got the lower angle. Well, the people on the lower end, right, they're all sucking. And we've got one of these weird-looking Ks where the top is very small up near the top, right, and the down one's way up there. It's not a good K. But as long as the jobless claims and the unemployment rate hang out where it is right now, they won't be able to go to zero. And Jay Powell, whether it was a softball, whether it was a setup question, essentially just told everybody, well, you know what, here's the new normal, guys. We're just going to increase the size of our balance sheet because, the economy's bigger. No. The debt is bigger. See, that's the problem. Why do you have to increase the size of the balance sheet if GDP goes up? You wouldn't unless the debt was going up. Because why does the Fed increase the size of the balance sheet? Because there's not enough people to buy the debt. It's that simple. If you don't have a lot more debt to sell, you don't need to increase the balance sheet. And what the market is saying is it's already here. It is already here. They haven't done it yet because why? Well, we're using the repo facility. And by the way, the only one that talks about it, he's on a radio station in Phoenix and Colorado and sells some gold. And so, we just won't tell anybody. Right? Did they put Mark Kamada on TV and say, hey, what's going on? No. Why? Well, they don't want people to know. They are literally setting the stage for much, much higher cost of everything. That's what's coming. There's no end in sight. They're not stopping the printing. They're going to continue to debase fiat money. And I'll admit it. You know what, guys? They've been telling us this. That is the plan. So we shouldn't really. Why am I surprised? I'm not. It was the most important part of the whole thing. But what did they focus in on instead? Oh, well, Jay Powell said it's not a guarantee. May not cut in February. That's the only thing the mainstream media talked about. But the most important thing was, and again, whether it was it sure looked pre-scripted. And again, the reason why I say it is he asked the question while telling Jay Powell the answer, right? Hey, by the way, you are going to increase the balance sheet, right? I mean, let's not talk about the repo facility. Let's not talk about debasement. Let's just say, well, hey, it's normal. It's funny. The Fed's balance sheet was not even $1 trillion for decades. Right up until the financial crisis. And then all of a sudden we needed it to be $4 trillion. Oh, wait, then we had the temper tantrum. It did, COVID, but it was the temper tantrum. It had to be $9 trillion. Now we got rid of it. Yeah. Where is it going to be? 20? 20 trillion? Gold's going to be 10,000? Yeah, probably. 800-951-0592, Patriot Radio News Hour on this Thursday. Gold's up $72, 4,003. And really, got to remember, so Jay Powell comes out after the gold market closes, so there's big movement. This is kind of, gold's essentially right where it was yesterday when we were on the air. Pretty much exactly. Silver, even higher, up $1.33, 48.82. $20 gold pieces, 41.95. Rolls of silver rounds. This is, it's funny because I got to look here. Let's see. Silver Eagles, $1,185 right now, because that's how high the premiums are right now. $6 over spot on silver, my cost, right? That's $1,100, right? That's what a roll of silver. That's my cost. So, I'm making $85 on almost a $1,200 purchase, right? That's not a lot. That's pretty thin. But these rounds that we have, 395 Sunshine round, right? You got to remember, Sunshine's the one that makes the planchets, the silver disc for the mint. Yep. They're the company that buys the 1,000-ounce silver bars from the COMEX, puts them into sheets, makes them into strips, makes the disc, the planchets, and then sends them to the mint to be stamped. $960. It's such a great deal. I mean, no offense. Yes, what do I pay more for a silver eagle than I do a silver round? Yes. Why? Because the premiums are cost more, right? Do I pay $225 a roll more for a silver eagle than a roll of silver rounds? Not even close. That's a huge value. Scoop them up. 800-951-0592. And just understand, we just got gaslighted again. They essentially laid the groundwork. Oh, yeah, we're going to increase our balance sheet. But we're not going to say that it's an emergency. We're just going to say, well, the debt's bigger, so it just makes sense that we've got to buy more of it. And that's going to be the new normal, Jason. See? It's fine. No, don't worry. So what? That's how little value the dollar really has, that no one really wants to buy it. And, oh, by the way, so what would happen if we didn't buy it? Simple. Rates would explode. Even though, look at the Fed, they lowered rates a quarter of a point, but the 10-year yield went higher. Mostly because, we don't know about December. I think December's happening, Jason. I think that was just a bunch of BS. And the balance sheet is getting ready. Quantitative easing is getting ready to make a comeback.
Well, a lot of economic news can happen between now and Christmas, so I mean they can change.
Yeah, that's true.
The Fed has done emergency rate hikes or rate reductions, right? They just need an excuse. Something has to float around in the news, and then you know what? This huge thing is really bothering us. We're going to lower another half point before the meeting because it's an emergency. So it can happen at any time. They try to give you the nice calm every 6 weeks meetings, and you have the guy in a suit that just is really boring that nobody wants to see generally. And then when there's an emergency, the guy gets to strut out there is like, we're going to make a big decision because look at the news. And whatever's going to happen. Yeah, well, I mean, COVID was going to happen, or something of the level of COVID was going to happen because economically things were getting ready to do. If we took COVID and just disappeared in 2020, it was all gone, how would they have explained crashing and burning it? Well, yeah, COVID probably did stir the markets up a little. It probably made it faster, right, Joe? But it was going to happen. Right. That 33%, the market went down. Maybe it wouldn't have stopped at 33% if you didn't have the boogeyman to blame it on. So, yeah, Joe, the rate reduction in December, they're lowering it as of yesterday, and they shouldn't. I mean, there's out of all the rate, all the stuff you talk about, Joe, all the years of this, rates this and the Fed that, and quantitative easing, quantitative tightening, and all the terms that get thrown out there, the taper tantrum, all that stuff, right? And out of all those years, as far as a rate reduction, this is the one that I can remember the best, that there's no reason for it. They don't have a single reason based off their numbers that this should be happening. So how bad is things going to get, Joe, if they're going to do something that's completely against their own logic, their bad logic? They're going to lower rates when the economy, the stock market's at record highs and inflation's too high.
Yeah. Well,
right?
Again, I want people to understand why.
They probably should raise the rates.
Here's why, guys. Nobody wants it. And now they're telling you, oh, by the way, yeah, and we're going to start quantitative easing. We're not ready to announce it yet, but we threw it out there.
Joe, you know who they're going to blame? You know who they're going to blame a couple of years from now with all these rate reductions when they shouldn't happen? You know who they're going to blame, right? They're going to blame Donald Trump. He was the one screaming and hollering out loud right in front of the whole world, drop these rates, I dropped the rates. Well, in a couple of years from now, when we have our preemptive market crash, that's what they're going to point at. These guys are all working together. It's such a show. It's such a circus show, you know. Yeah. And he'll be leaving office in a couple of years. So who cares if Donald Trump gets blamed? He can't lose an election. He'll be done.
Well, he did say that he's not going to run for re-election. Finally, he did say it.
No, they'll get somebody else. It probably needs to be a Democrat in 28. That's just the way it goes.
Yeah, well, and other news. So, okay, guys. So I set the table for you. Get your gold and silver.
Pick it up.
And understand, man, wow, you are going to need more income. I'm sorry. Now, for those that, hey, I did real well good. You know, the guys on the upper part, I love it. Someone texted me, the straight line of the K, right? That's the debt. Right? Just going up like a rocket ship. And the higher that goes, right, the less and less people are on the upside of that K. When we get back, I'm going to tell you the big deal with the Chinese. And then you tell me who won that. I don't even know if it's winning, right? But I'll give you all the details next. Joe and Jason on this Thursday. Really quickly, let's go over the meeting with Xi Jinping. Here's what's going to happen. China's resumed soybean purchases. I think they bought 3 cargo loads yesterday. They're going to buy, I think starting next year, 25 metric tons of soybeans, and they're going to do that for the next 3 years. That's about what they used to buy. And I should say recently, they used to buy more than that, but that's and then other countries apparently will buy 19 million metric tons. So, okay, pretty good, I guess, right? Good for soybean farmers, no doubt about that. The 57% Chinese tariffs are now going to be 47%. Because they had a 37% tariff and then a 20% fentanyl tariff. That fentanyl tariff has been cut to 10%. So apparently, the more Venezuelan boats allegedly that we blow up that don't have fentanyl on it allow for the Chinese, I guess. Well, China said, "Oh, we'll help. We'll work on it. We'll work on it." They're also saying that, hey, we'll help you work on a TikTok deal. This TikTok deal is never ending, right? That seems like it's all, we're going to have a deal. Oh, why we don't have it? We're going to have it. No, we don't have it. Yeah, you know. In the meantime, nothing's changed. Like I said, China says that it's committed to reducing precursor flows of fentanyl. U.S. is going to suspend a new rule on Chinese companies that may be affiliated with other Chinese companies that we don't like. So, in other words, we're relaxing some things. China's expressed an interest in a pipeline project in Alaska. Well, yeah, who wouldn't? I think every country in the world would be interested in that, but okay. The U.S. said that they are behind the Chinese in nuclear power, and it's all hands on deck for nuclear power. In addition, the U.S., like I said, pausing a rule targeting subsidiaries of blacklisted Chinese firms, and the Trump administration is going to work with NVIDIA and grant access to the Blackwell line. Now, what I'm being told is they won't get the best Blackwell chip. I guess they'll get the previous version of the Blackwell chip. But if you listen to NVIDIA, their CEO, they're like, dude, are you kidding me? Yeah, the U.S. is a little bit ahead of the Chinese in chips, but it's insignificant, and the Chinese are catching up anyway. But that's the deal, Jason. So that was a major announcement. So no 100% tariff. Also, Donald Trump on the plane after the meeting said, we're going to figure out something for food stamps too. So apparently it's not done yet, but apparently Donald Trump says, yeah, we're going to get people food stamps.
I know several states are already saying that they'll cover it. They're already telling their people in their states, oh, we'll get it done. So I guess the states aren't quite as broke as they pretend to be. I know New Mexico is one I read.
Listen,
we're going to have the food stamps.
New Mexico has like 20% of their population. I think they're the worst state in the country. They have more people on food stamps than anybody else. So they got to, that'd be bad in New Mexico. Listen, tacos for everybody, right? You know, that's what they right? The Trump thing, the taco thing, and all these threats. I don't know. If this is what they were going to do, kind of ridiculous, right?
Beavis and Butthead always loved Taco Day.
Yes.
even when the principal gave them free passes to leave school because Bill Clinton was visiting the school, they said, "Well, we got to go to school. It's Taco Day."
Taco Day.
They had to go.
Tacos. It's Taco Tuesday. Well, now I guess it's Taco Thursday today. Don't worry, for those of you on food stamps, Trump says you're going to be able to have tacos. Everybody wins. In
case you don't know what taco is, it's Trump always chickens out. That's what the liberal Democrats sort of stab at, and that he makes big threats. And lately, this term he's not quite made out on all of them. The first term, every time he stomped around, it happened. But this term has not been quite as easy for him. Yeah. So I guess the government shutdown continues, I guess. I thought it would go into November, Joe. I'm pretty sure I think it'll go for another week. I think they really want to see what happens when the food stamps aren't getting paid, or what happens if the government stops paying food stamps. Well, I don't know. It looks like they may have went. I'll say this. It's probably going to be the air traffic controllers. That's you know what? I thought for sure, okay, don't give people food stamps. They'll fix that stuff lickety-split because it'll be bad. Now, if they're gonna pay them, and I don't know how, but they'll come up with the money somewhere. They're gonna, I think, try to pay the troops again this Friday. But not the air traffic controllers. So the air traffic controllers all just need to basically not go to work. How long could you go if there was no flights? I mean, we did it for COVID. How long did that last? Or after 9/11? What did they go, like 3 days? It really shows you the power of the central bank. If you're Elon Musk, isn't this an opportunity? Hey, I can loan you some money. You just pay back. You just pay back with this high interest, and then I make some money. Give me my $1 trillion, and then I'll lend it to you. But Joe, they don't do it. There's a reason they don't do it. You're not allowed to loan to the government. Only one company gets to loan to the government, Joe. That's right. We'll be back. Final segment. Patriot Radio News Hour, wrapping up this Thursday. Again, rolls arounds well below spot now. Spot almost $49. Wow. Rolls arounds 960. Gold is now at a 4,007. $20 gold pieces.
4195 at 800-951-0592. And text it. Boy, you're going to need income. And, of course, I've been worried about these healthcare premiums for like a year. I'm like, they screwed up. Then, these things are, it's not tariffs. The Fed is getting ready to go back to quantitative easing. There's already liquidity problems in the U.S. debt market. They just don't want to tell you, oh, well, we got this repo facility. It's fine. It's fine. Don't worry about it. Yeah, we're going to start it again. I think that just means they're going to bring rates as low as they can. And my guess is, I don't know, maybe 3, 2.5, 3 is probably the best they're going to get to where inflation is just so overwhelming that they can't do it. Because you really don't want to expand your balance sheet unless rates are zero, right? That's when they've been, that's when they do it. Well, that's not going to happen this time around, I don't think. I think gold and silver are going to skyrocket. Well, they already are, but they got a long way to go. I would not be surprised if they start talking gold revaluation late next year as a way to buy some time. And at that point, might as well just make it $10,000, right? Why not? Because then you can be like, hey, we got $3 trillion. And then, of course, big news out of Texas today, another massive purchase. We now have purchased enough equipment for almost 23 million mega hash. We've only sold 17 million mega hash, so we're way ahead. But the realities are we have bought enough containers now that the power will be 40 million mega hash. And I believe, don't quote me on this, but I believe we already got 4 containers in Texas. Just they're going to start turning on here week by week. That the next round is in the ocean already. But we just bought 4 more containers, another 156 miners. Guys, this is just a huge indication to me that they have some big things lined up when it comes to Layer 2, and they just are now racing to get the mine big enough to support it. Again, we got to remember, you don't need 100 million mega hash for Layer 2. Right? My guess is, I don't know, 20 million would be plenty to start, and we've gotten over that, and it looks like we are racing as fast as Fog Hash can build them and put them in the ocean. Those containers are